Good morning. It is Wednesday, March 31st, and we're going to be looking over the S&P here. So let's jump over to the chart. So let's just recap that basically since Monday, what we've been talking about is that the story hasn't really changed. That Monday we said the range was about up to that 39.70 area. The high of the day was 39.71 quarter. And then we've said several times there's room for some deeper selling into some lower levels in the 3900s at least. And it just basically has not had any success on getting into those levels. So it's been pretty range bound. And I think there's some pretty important things that are going to need to happen in order to break out higher here today. There's basically a pattern that's been happening here in the market where things are progressively getting weaker, and I'll show you what I think it would look like for what prediction points are telling us for things to actually start to turn around here and start to get stronger. So here we go. Let's look at the overnight session. So we have this CP right here, came up, CP's 58.50, we saw 57.75. That was coming off of these 3 KPs. Remember we had 3 KPs a little bit lower down here, and not a big surprise that they moved up, basically telling us that the market needs to hold higher if things are not breaking down. So that's going to be important here. A lot of trading happened in this area here overnight, and then moved back up here to 57 again. So let's just pull this chart like this. You can see I have these 2 red lines drawn in here, and I have done that for a reason. It's basically this is what I'm going to be looking at. So if you want to do this, I'm on Pacific time, so you could draw these in. So I'll give you this lower one. This is on the NinjaTrader charts. This is at 3:10 Pacific time, and that's starting off of the CP at 58.50, and it would then end at this CP at 12:20. So you can just draw it from that time and you'll have the same line that I have. So 3:10 in the morning until 12:20 this afternoon. And then this one you can draw here at this would be 1:25, so 13:25 Pacific time. And then it comes back over to here, which would be 16:30 Pacific time, down to the other CP. So from CP to CP. And I'm not going to tell you the logic about how all that gets created or whatever, but I'm just telling you those are going to be something that I would treat when we trade into these levels, or if we trade into these levels, especially this one, and then they cross and become pretty close here, right here. I'm definitely looking at that. So fairly important here. So let's talk from a want to look at what has gone on so far here. So this is, remember we had 71 quarter that was up here. This CP is now 73 quarters. So if I pull this back a little bit, you're going to see, okay, here was some trading up around this area. What I'm really looking at is they're going to need to break up above these 2 red lines that I have drawn in. So here's where the market's trading. They're going to need to break up above here. So if that's later in the day, it's going to be closer up to the CP. And depending, let's say if it was a straight shot up right now, it would be more like 60 to 50, something like that. Right there to start. Breaking this lower one would be a good start. And then, but you can see these would meet up right here at 8:35 if that were to be the time. Anyway, so you can kind of get the idea. It doesn't change anything about prediction points. It's actually derived using prediction points, but this is just sort of the level that I'm looking at. I've shown you how we draw the fib levels in. This is extremely advanced version that would be similar to that. So if we were to look here and we drew in these fib levels, you'd see, depending on, so if maybe this and this correlate right here at 50%, and then this right here would correlate at 50%. So this might end up being more like this level. It would say if it came up here at 730, that would be 64 1/4, which would be that top level. So it's taking the time and adjusting it. Anyway, not going to go too much more into that. So a couple of important things there. We really need to break up above this, and then would need to break up above the CP. If that happens, you can see there's this one, and then about 2 3/4 points higher, and then a few points higher there again, and then I mean, there's not a lot of room right here. So up above the CP, it's sort of okay here, here. This would be a new all-time high by 2 ticks, I believe, and then new high, and then right there. So this would be, let's see here. It's not a ton of room up there. It would need to break up above that. This is an interesting area, this 50% between these. So this would be 90 1/4. And then look again, 3 KPs altogether right there. Things open up a bit. So what you can see is it's not like there's a huge rip. You'd have to go through a lot of prediction points on the upside. And so we'll just have to take, really, what I would say about these is take it one at a time if they can even get up above here. So I'd take all that one step at a time. So what happened overnight? They held here, they came back and tried to hold here, then they held here, then they front ran this by 2 ticks, so there's 41, that's 41.50. At this point, I'd consider most all of this is pretty much used. So what does that mean? Let's draw a fib in here and look at what it looks like with the fib in here. So this is really kind of no man's land. You have the CP up here at 58.50, which was really used within a couple of ticks. And then you have this CP down here. And you've got a 28 point gap between the CPs with this congestion cluster in the middle. So the first thing is there's nothing super fantastic here as far as support goes. I mean, if they were trying to base something and move higher. This was a good sign yesterday, but then no real follow through. So if this was, we had this 33 1/4, it came to 33.75. They front ran that by 2 ticks. I am going to say at this point that if this was institutional money that was buying here, this thing would have ripped already. And so we haven't seen that. I mean, this to that doesn't feel like institutional buying. So it's not how it seems to me. The market is progressively getting weaker. You can see we had this, and then you can see we're trading below this. So it's the market is it has been progressively getting weaker here. Doesn't mean it can't break out and move higher, but as of right now, it's been in a range for 2 days. We're still in a range, and we're not breaking up out of that range. And I'm not sure how much longer they'll be able to hold it in that range. But today, especially today, let's just take it as it comes, one step at a time. So that's what they would need to do on the upside there. Um, just a lot of trading in here. This is just not an area where I'm likely to do anything. So I want to trade at the extreme ends of the range. So for me personally, the way I trade, now there might be a number of you that this is what you love to see and you love trading in here. Not how I trade. I can't really make an argument that any of these are untested. Doesn't really fit in my game plan to take a KP that's been tested a bunch and traded a bunch. And so in other words, if I were short, let's say if I could get short up here, and I'm looking for would any of these potentially hold up the market on the way back down? Not really. I'm not really worried about it. I'm not really concerned about taking profit anywhere here. Not enough to do anything about it really. So if I'm not even really that concerned with taking profit, it doesn't really become an area where I want to be getting in a trade. So I have these, I drew this in just to give you an idea. I said overnight, last night I think I said if they could hold this 35.75 area, that'd be the midpoint. It'd be interesting to see what happens if it does probe down. If it does come down into here, I'll be interested to see what the reaction is off of this area. And then of course we do have the CP at 30.75. So you can see they spiked through that over here, never came back over there. Obviously this is a new price for today, but just want you to see what that looks like. Now, here's what's really interesting about this and why this is a fairly significant, whatever's going to happen next starts to become fairly significant. So here's 30.75, and then look at what is next below it. The next price down here is at 38.81. So 50-point gap from here to there. So that means a couple of things. It makes this price extremely important. Now, there's a chance, look at this first fib level down to here is 20, or is 39.20, let's just call it 39.20. It literally is 10 points below this price. So fibs, the more dominant or important the price where you're drawing the fib from, and some of you are maybe, traditional Fibonacci users. I don't use fibs that way. But the more important, let's say the leg that you're using to draw, and since we're not using legs, we're using prices that haven't been established as important yet, but we know they're going to be. So we have these prediction points and we're drawing the fib in there. It makes the fib prices even that much more important. So if you're using prediction points, I draw this fib from here down to this KP, and I would expect each one of these so at some point during the day, if we were to trade into here, would be significant. And part of that depends on how fast it's moving. I can't really do a whole training on it right now, but maybe that's something that we'll cover in the future. So if they were to break here, look for potentially a probe just to this area. If it breaks, I definitely become interested in selling if we're breaking lower. And if it breaks, then what we're looking for, if you play reversals, the further this comes down here, it's highly unlikely it goes from breaks and comes all the way through here without any kind of a retrace and drops 50 points. So what you usually see is if we get a hard move into one of these levels, and the faster the move into this level, probably the more I like the trade. So I'll just be watching for how fast it can move into one of these levels if that were to come into play. Then I might take a reversal trade off of here to come back and retest up here, or maybe back even up here or something. So just depends on if the risk and reward is worth it. So this is 39.30. If I can buy 39.20 is a little bit tricky because maybe I'm going to get 10 points, maybe, and I have a 2-point risk, let's say. So it's still a 5-to-1 risk to reward, but if I'm buying 05 up to here, I can risk a couple of points. I have like a 10-to-1 risk to reward. So that's the kind of trade that I like. It's low probability. It might work, let's say, 20% of the time, but I have a 10, maybe 12-to-1 risk to reward. So I don't need it to work more than 20% of the time. A lot of traders can't handle that kind of, taking those kinds of hits along the way. 38.92, 75. If I'm buying that, I got a huge, at least back up to here. So I've got a 30-point target or something. Risk a couple points for 30 points. I've got a 15-to-1 risk to reward. I don't need that to work more than 15% of the time or 20% of the time. So, I'm going to be playing the probabilities on that, but predominantly I'd be looking for it, this thing to flush if that were to happen. I cannot stress the importance enough of that we break out above these and that we show strength up there. That if this was institutional buying that was happening over here, where did all those institutional buyers go? So that's what we're looking for. Can they break above here? If they come up here, this is likely a trade we'll be looking for in the live trade signals to see if we can get a short on up here. And then I don't have this loaded, so let me load this really quick because I think it's relevant for today. So I this is one of the indicators that we have that I use. And there we go. So there's key turns for today. So I just want you to see this is really simple. Key turns is just a price that above this we are predominantly looking for buys, and below it we're looking for sells, and we've had some members who've done really well basically just trading off of key turns. So 66 is the one level here. 74 quarter is the other level. Now here's what's interesting. Originally key turns was just one level, it was this one, and below this you'd be bearish. And then we added these other two levels to create other opportunities. So if you look right here, see we have 39.74. So look at what happened. We opened clear over here at 39.49. And what key turns is telling us is that the market would have to come all the way up to here and break above here with strength in order to get on a buying bias. So pretty interesting. And then, so 66 is another level. You can treat that the same way. But notice, ironically, where this is basically 36 half, 36 quarter, 35.75 is the midpoint. So there's a little bit going on right here. If we were to break, this would be below all three key turn levels and below the midpoint of this gap here in prediction points. And this 30 area and this 20 area would be like the last thing holding this all up. And if that can't hold, yes, we can see some bouncing from here, some retracement in this move, but could start to get ugly at that point if we do see that. So we'll take it one step at a time here today. Be smart, you know, plan your trades, trade your plan, and we'll see you in the walkthrough after the market closes.